Welcome back to Iraqi Dinar Alert. Today, we're diving into some huge news coming out of Iraq. The country's gold reserves have surged to record levels, and everyone is asking the same question. Could this finally signal a stronger Iraqi dinar? Let's break down what's happening and what it really means for the currency. So, why is Iraq suddenly stacking up so much gold? It's all about a smart strategy called diversification. Central banks, like the Central Bank of Iraq or CBI, don't like to keep all their eggs in one basket. They hold a mix of assets like cash, government bonds, and foreign currencies. By adding more gold, Iraq is building a powerful buffer against economic shocks and currency swings. The value of this gold is skyrocketing, not just because they're buying more, but because the global price of gold has been climbing. In the first half of 2025 alone, the value of Iraq's gold reserves jumped by nearly 5%. The CBI is essentially building a financial safety net to protect the country's economy from global instability. And the numbers are truly historic. Recent reports show Iraq's gold holdings have hit an all-time high, now exceeding 24 trillion Iraqi dinars. This means gold now makes up about 20% of the country's total reserves, a milestone that has never been reached before. So, what does all this gold actually mean for the dinar? A country's reserves, especially gold, are like a backbone for its entire monetary system. First, it boosts financial credibility. When a central bank has a mountain of gold, it sends a strong signal to investors and the world that its economy is solid. This increased confidence can reduce pressure on the dinar and make it more stable. Second, it's a hedge against risk. Iraq's reserves have been heavily tied to the US dollar, By holding more gold, which isn't tied to any single currency, Iraq protects itself if the dollar weakens or if there's turbulence in global currency markets. Third, it gives the central bank more power. With stronger reserves, the CBI has more tools to intervene in currency markets if needed. They could use their gold-backed assets to stabilize the dinar's value. In fact, some statements suggest this is exactly why they're building up their gold holdings. Over the long term, this strong financial position could absolutely support a stronger, more stable dinar, as long as other parts of the economy are also healthy. But let's be realistic. While the surge in gold is fantastic news, it's not a magic button for an instant revaluation, or RV of the dinar. Simply, holding more gold doesn't automatically trigger a currency change. A revaluation is a complex policy decision that involves many other factors. Also, gold isn't as liquid as cash. If the CBI needs to act fast, selling large amounts of gold can be slow and tricky. Plus, the value of gold itself can go up or down. If global gold prices were to fall, the value of Iraq's reserves would take a hit. Most importantly, a currency's strength depends on the entire economy. Iraq still has to manage things like inflation, political stability, and its reliance on oil. Gold reserves are just one piece of a much larger puzzle. So, what are the experts saying? Most analysts agree that this move is about boosting economic stability and protecting against risk. Hitting that 20% mark for gold in their reserves is a huge deal for a country like Iraq. Some even think it's a step toward de-dollarization or relying less on the US dollar, though that's a long-term process. Let's look at the most realistic scenarios for the dinar. The most likely outcome is a moderate strengthening over time. As Iraq builds its reserves and continues with economic reforms, the CBI can use its financial strength to gradually support the dinar, leading to a more stable exchange rate. This gold also gives Iraq a critical cushion during crises. If there's another global recession or a sharp drop in oil prices, these reserves can act as a backstop to prevent the dinar from crashing. However, a major sudden revaluation is unlikely without broader structural reforms. To wrap it all up, Iraq's massive gold accumulation is an incredibly positive sign for its financial health. It shows a strategic move toward greater stability and resilience. While this definitely strengthens the foundation for a more valuable dinar in the future, it doesn't guarantee a dramatic change overnight. The future of the dinar depends on a combination of this strong reserve policy. 2. Have you seen the news about Iraq's gold reserves? They've been hitting all-time highs, and it's got a lot of people talking. What does this mean for the Iraqi economy? And more importantly, for the future of the Iraqi dinar? Let's break it down. First, Why is Iraq buying so much gold? Every central bank in the world holds a mix of assets to keep its economy stable. This usually includes foreign currencies and government bonds. So, how does this affect the Iraqi dinar? The strength of any currency is tied to the country's reserves and the confidence investors have in its economy. This can lead to better credit ratings, more investor trust, and a more stable exchange rate for the dinar. It also reduces Iraq's dependence on foreign currencies, like the US dollar, which can fluctuate wildly. Think of it as a protective shield. Having more gold gives the Central Bank of Iraq more tools to manage the dinar and protect the economy from shocks, like swings in the oil market or global recessions. But here's the million-dollar question. Does more gold automatically mean a revaluation of the dinar is coming? The short answer is no. This is where a lot of misunderstandings happen. While having more gold is definitely a positive step, it doesn't automatically trigger a revaluation. Or RV. An RV is a massive decision that depends on a whole range of factors, things like inflation control, government spending, and broad economic reforms. Gold is just one piece of a very large puzzle. Think of it this way. Gold is a powerful asset, but it's not as liquid as cash. A central bank can't just spend its gold bars to pay for things. Also, global gold prices can go up and down. These issues have a much bigger impact on the dinar's value than the amount of gold in a vault. So, what do the experts think? Most financial analysts agree that Iraq's gold strategy is a smart move for building long-term economic resilience. What are the most likely outcomes? To wrap it all up, Iraq's growing gold reserves are a huge step in the right direction. It's a strategic move to build a safer, more stable economic future. This certainly helps support the dinar and builds a foundation for future strength. It's not a magic button for an instant revaluation. Real lasting strength for the dinar will come from broader economic reforms and smart governance. Still, it's a very positive development to watch. 2. Have you heard the news? Iraq has been quietly making a massive financial move, one that's got economists and investors all over the world talking. They're buying up gold, and lots of it. This has sparked a huge question. Could this golden strategy finally be the key to strengthening the Iraqi dinar? Let's break down what's really happening and what it means for the future. First, why is Iraq stocking up on gold? It's all about building a safer financial future. Think of a country's reserves like its emergency savings account. Usually, it's filled with US dollars, euros, and other currencies. But Iraq is adding more gold to the mix. Why? Because gold is like a financial rock. It holds its value much better than paper money, especially when the global economy gets shaky. This move helps create a more secure foundation for the entire country. And the timing couldn't be better. With gold prices soaring globally over the past few years, the gold Iraq already had has become even more valuable. So, the central bank isn't just adding more gold, it's also watching its existing stash grow in worth. It's a smart way to protect the economy from risks. Iraq's economy is heavily dependent on oil, and the region isn't always stable. Gold acts as a shield, offering long-term protection that currencies alone just can't provide. In fact, reports show Iraq's gold reserves have hit their highest levels ever, showing a clear, deliberate plan to build financial muscle. So, how does all this gold actually affect the Iraqi dinar? Well, a country with strong reserves is seen as more stable and credible on the world stage. When investors and financial institutions see Iraq building up its gold stockpile, it boosts confidence. This improved economic image could, over time, help support the dinar. It also helps reduce Iraq's heavy reliance on the US dollar. While the dollar is powerful, being too dependent on any single currency is risky. Gold offers a counterbalance, protecting Iraq from ups and downs in the dollar's value. Having more gold also gives the central bank more flexibility. While they don't use gold for day-to-day currency management, it gives them the confidence and financial firepower to handle pressure on the dinar and keep its value stable during tough times. Now, let's address the big question on everyone's mind. Does this mean a dinar revaluation, or RV is just around the corner? The reality is a bit more complicated. Many people link rising gold reserves directly to a dramatic jump in the dinar's value, but that's not how it works. Gold is just one piece of a much larger puzzle. For a currency to be revalued, a country needs deep economic reforms, low inflation, and stable governance. Gold helps with stability, but it can't fix everything else. Plus, gold isn't as liquid as cash. You can't spend it instantly to manage a currency crisis. It's a safety net, not a quick-fix tool. We also have to remember that gold prices can go down too. If prices fall, some of the financial benefits Iraq is seeing now could shrink. The biggest hurdle for the dinar remains Iraq's internal challenges. Issues like budget deficits, corruption, and an over-reliance on oil have a much greater impact on the dinar's value than its gold reserves. Without serious internal reforms, gold alone simply can't push the currency's value up significantly. So, what do the experts think? Most analysts agree that buying gold is a smart, long-term strategy for Iraq. It's about creating stability and reducing vulnerability. It's a sign of responsible financial management, but it's not a magic button for an immediate dinar revaluation. So what's the most likely future for the Iraqi dinar? The most realistic scenario is a slow and steady improvement. If Iraq continues to strengthen its reserves while tackling its economic problems, the dinar could become more stable and maybe even appreciate modestly over the long term. This growing gold reserve also means the dinar will be better protected during global crises, like oil price crashes or geopolitical tensions. For now, the central bank seems focused on keeping the exchange rate stable and predictable, and having more gold makes that job easier. To wrap it all up, Iraq's move to expand its gold reserves is a powerful and strategic step toward building a stronger economic foundation. It's boosting financial security and reducing risk. While this is great news and creates a supportive environment for the dinar, it doesn't guarantee a sudden spike in value. A truly stronger dinar will depend on deeper economic reforms and moving beyond oil. Still, Iraq's golden strategy is a very promising sign, one that points toward a healthier, more stable currency in the years to come. Today, we're re-diving into a topic that's been buzzing in financial circles: Iraq as growing mountain of gold. The country has been steadily bulking up its gold reserves, and it's got a lot of people wondering, could this be the key to a stronger Iraqi dinar? Let's break down what's really going on. First up, why is Iraq buying so much gold? It's all about strategy. Think of it like diversifying your own investment portfolio. You wouldn't put all your money in one stock, right? The Central Bank of Iraq feels the same way. It's moving to create a more balanced mix of assets. While they hold plenty of foreign currencies like the US dollar, gold is seen as a super stable, long-term asset. Like a financial safety net, especially when the global economy gets a little shaky. Plus, gold prices have been on a serious upward trend globally. This is a double win for Iraq. Not only are they buying more, but the gold they already have is becoming more valuable every day. It's a smart way to boost the nation's wealth without doing much at all. Another huge reason is to protect the economy from instability. Iraq's economy is heavily dependent on oil, and oil prices can be a real roller coaster, influenced by everything from global politics to shifts in energy demand. By stocking up on gold, Iraq is building an economic shield, a buffer that can absorb shocks and keep the country on a more even keel. We're talking about reserve levels that are hitting all-time highs for the country. This isn't just a random shopping spree. It's a deliberate national strategy to build financial muscle. So, the big question is, can all this gold actually strengthen the Iraqi dinar? Well, it's not a simple yes or no. While gold reserves alone won't magically revalue a currency overnight, they play a huge supporting role. For starters, it boosts international credibility. When a country has hefty reserves, global markets and investors take notice. It sends a powerful message that the country is financially responsible and prepared. This positive perception can indirectly support the dinar's value in the long run. It also means Iraq is less reliant on the US dollar. Holding a lot of one foreign currency can be risky. By adding more gold to the mix, Iraq is diversifying its holdings and creating a more secure financial foundation for itself. This gives the central bank more confidence and flexibility. While they don't use gold for day-to-day currency management, having it in the vault provides a powerful backstop. It helps them manage pressure on the dinar and maintain stability, especially during turbulent times. Ultimately, a healthy reserve system helps stabilize the entire economy, laying the groundwork for a stronger currency down the road. Now, let's address a common myth. Some people believe that more gold automatically means a dinar revaluation, or RV, is just around the corner. The reality is much more complex. A major currency revaluation requires a whole cocktail of ingredients, things like controlling inflation, implementing serious economic reforms, and maintaining fiscal discipline. Gold is just one piece of that puzzle. Also, gold isn't like cash. You can't just spend it instantly to manage short-term currency swings. Central banks rely on liquid cash reserves for that. And let's not forget, gold prices can go down too. If global prices were to fall, the value of Iraq's reserves would drop with them. The biggest hurdles for the dinar are still internal. Challenges like political instability and an over-reliance on oil revenues have a much bigger impact on the currency's value than gold reserves do. Without tackling these core issues, a dramatic surge in the dinar's value is unlikely. So, what do the experts think? Most analysts see Iraq's gold strategy as a very positive and cautious move. It's a sign of smart, long-term planning. They applaud it as a step toward stability. But they also agree it's not a silver bullet for the dinar's exchange rate, at least not in the short term. Looking ahead, what can we expect? The most likely scenario is a gradual improvement in the dinar's stability. If Iraq continues to build its reserves and push forward with economic reforms, we might see small, steady gains in its value over time. What these gold reserves definitely provide is a stronger safety net. If there's another global crisis, like a sudden drop in oil prices, Iraq will be much better prepared to protect the dinar from a sharp fall. In conclusion, Iraq's growing gold reserves are a fantastic sign. It's a strategic move to build a more resilient and diversified economy. While it won't trigger an overnight revaluation, it creates a much stronger foundation for the This commitment to financial strength is a positive step that could lead to a more stable and potentially stronger dinar in the years to come. See you in the next video.